Welcome back to the channel. Big news today, Donald Trump has just been elected as the 47th President of the United States. The markets are already reacting, and we're about to dive into the potential impact of his victory on the Nasdaq 100 and gold prices. In this video, we'll break down how President Trump's policies could shape the economy, how they might influence stock markets, and why investors are flocking to gold. Whether you're an investor or just curious about the economic ripple effects of his win, stay tuned. Trump's victory. Impact on Nasdaq and gold. Now that Donald Trump is the 47th president, what exactly can we expect from his economic policies? As we all know, Trump's first term was marked by tax cuts, deregulation, and a pro-business stance. And now, as he takes office for a second term, here's what might be on the table: tax policies and deregulation. Trump is likely to push for further tax cuts, especially corporate tax rates. The Tax Cuts and Jobs Act during his first term cut corporate tax rates significantly, and he has hinted at continuing this policy in his second term. For the markets, lower corporate taxes typically translate into higher profits, particularly for large-cap companies. This is bullish for tech stocks, which dominate indices like the Nasdaq 100. Infrastructure investment and government spending. Trump has signaled that he will push for a massive infrastructure plan, along with continued defense spending. This could be a positive catalyst for sectors like construction, energy, and defense. However, these spending plans could also lead to a widening fiscal deficit, which might raise concerns about inflation and debt. Trade policy. On trade, we can expect more of the same "America First" approach, especially with China, Russia, and other foreign partners. There's likely to be a focus on reshoring manufacturing, revising trade deals, and addressing the trade deficit. This could create volatility in markets, particularly those linked to international trade, but it could also boost domestic production. Let's break down the immediate market reactions to Trump's victory. As we've seen in past elections, financial markets react quickly to new political leadership, and Trump's win has certainly made waves. The Nasdaq 100. Trump's victory is likely to have an initially bullish impact on the Nasdaq 100. 1. Pro-business policies. Trump has been a strong supporter of the technology sector. Even though his administration has criticized big tech at times, his policies were generally in favor of tech innovation and fewer regulatory hurdles. 1. This is great news for companies like Apple, Microsoft, Amazon, and Google. 2. Corporate tax cuts. A continuation of corporate tax cuts would especially benefit large tech companies, which have been sitting on large cash reserves. 2. Lower taxes allow these companies to reinvest more into their businesses, boosting profit margins. 3. Deregulation. Trump's support for deregulation in sectors like energy and technology has been a positive factor in the stock market, especially for companies in these spaces. Gold prices. Now let's talk about gold, which often reacts strongly to political changes and economic uncertainty. 1. Inflation concerns. Trump's expected fiscal policies, such as tax cuts and infrastructure spending, could lead to a higher budget deficit and potentially spur inflation. 1. As inflation rises, gold often becomes a go-to asset for investors looking to protect their wealth. 1. If inflation expectations soar, gold prices could see a significant uptick. 2. Dollar weakness. Trump's trade policies could weigh on the US dollar, especially if tensions with China and other trade partners escalate. 2. Gold typically rises when the dollar weakens because it becomes cheaper for foreign investors to buy gold. 3. Geopolitical risks. With Trump's strong stance on foreign policy, particularly regarding China, Iran, and other global powers, any escalation in tensions could drive more money into gold as a safe haven asset. Summary. The Nasdaq 100 is likely to see an initial boost from Trump's pro-business policies, especially tech stocks, while gold prices could rise if inflation and geopolitical risks create uncertainty. So, we've talked about the initial reactions, but what about the long-term impact? Trump's second term could bring both opportunities and risks to investors, particularly in the Nasdaq 100 and gold. Nasdaq 100 in the long term. In the long run, the Nasdaq 100 could benefit from Trump's pro-business policies, but there are risks. 1. Rising interest rates. If inflation accelerates as a result of increased government spending, the Federal Reserve might raise interest rates to keep inflation in check. 1. This could hurt growth stocks in the Nasdaq 100, which are highly sensitive to interest rate hikes. 1. The higher the rates, the less attractive future earnings become, and that can put pressure on stock prices. 2. Trade wars. If Trump continues to engage in trade conflicts, particularly with China, companies that rely heavily on international markets could suffer. 2. This is particularly important for tech companies that operate globally. 2. So, while some Nasdaq stocks may rise, others could face headwinds. Gold's safe haven status. As we move into 2025 and beyond, gold's role as a safe haven asset could grow even stronger under Trump's second presidency. 1. Inflation protection. If the U.S. government continues to run large deficits due to spending on infrastructure and defense, it could spur inflation. 1. Gold has historically done well in periods of high inflation, making it an attractive asset for investors worried about fiat currency debasement. 2. Global uncertainty. Trump's more aggressive foreign policy could lead to higher geopolitical risks. 2. In such scenarios, gold tends to rise as investors seek to protect themselves from global uncertainties, such as trade wars, military conflicts, or financial instability. Summary: the Nasdaq 100 could see both growth and challenges in the long run, while gold is likely to benefit from inflationary pressures and geopolitical risks under a Trump presidency. While a Trump victory could provide short-term boosts to the market, there are significant risks on the horizon. 1. Political gridlock. If Trump faces a divided Congress or political opposition, pushing through his economic agenda might be difficult. 1. This could create market uncertainty if key policies are delayed or blocked. 2. Rising debt and inflation. Aggressive fiscal spending and tax cuts could lead to mounting national debt, and inflation could spiral out of control if left unchecked. 2. This would hurt both stocks and bonds, and could send gold prices soaring as a hedge. 3. Geopolitical tensions. Trump's stance on foreign policy could escalate tensions, especially with China and Iran. 3. This could lead to market volatility, with sectors like energy, defense, and gold seeing the largest shifts. So, what does Trump's win as the 47th president mean for the markets? In the short term, the Nasdaq 100 could see a surge, particularly in the tech sector, due to tax cuts and deregulation. Gold might also see an upward trend, driven by inflation concerns, a weaker dollar, and geopolitical risks. But in the long term, interest rates, inflation, and global trade tensions could create volatility. If you're an investor, it's crucial to stay informed and adjust your strategy as events unfold. Let me know in the comments what you think about Trump's victory and its impact on the markets. Will tech stocks continue to rise? Will gold go even higher? Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and share. Until next time, stay informed, stay invested, and make smart financial decisions. See you in the next video.